Welcome to this explainer. If you're tracking commodity prices right now or, actively investing, you've probably noticed that silver is presenting a really fascinating puzzle. So today we're exploring one highly anticipated question. Is silver finally gearing up for its next big breakout? Okay, let's dive right into this. We're going to peel back the layers on the current pricing flatline and look at the macro forces setting the stage for what could be a massive shift.
Now, to really get a handle on the global trajectory, it helps to ground ourselves in today's micro-level reality. Just looking at the official rates in Pakistan for July 27, 2026, a tola is sitting right at 6,890 rupees, and an ounce is just over 18,461. But honestly, the specific numbers aren't even the biggest takeaway here. What's crazy is that these prices represent a completely stable market with literally zero significant movement from the previous session. We aren't seeing wild swings, no panic buying, just a perfectly flat baseline. And if you've been in commodities long enough, you know a perfectly flat baseline usually means something huge is brewing just over the horizon.
And that eerie stability actually brings us right to a powerful insight from our source material. Today's market is showing a flat trend, meaning buyers and sellers are waiting for stronger economic signals. I want you to really focus on that word, waiting. A flat trend doesn't mean the market is dead, right? It means it's holding its breath. What we're seeing is this intense period of anticipation. Both buyers and sellers have essentially just hit the pause button because they know silver is deeply sensitive to international data. When institutional money and retail investors pause at the very same time, it creates this coiled spring effect. This local calmness, it's just a temporary baseline before those dynamic global forces take the wheel.
And this brilliantly illustrates silver's unique, let's call it an identity crisis. On one hand, it's an absolute industrial necessity. I mean, we're talking crucial components for EVs, solar panels, and high-end medical tech. But on the other hand, it's a classic safe haven asset used to hedge against economic turbulence. It's the collision of this heavy industrial demand with intense investor speculation that makes silver so incredibly explosive. Gold is primarily a monetary metal, but silver? Silver's being pulled in two completely different directions. When manufacturing booms, it gets consumed. When the financial sector panics, it gets hoarded. Understanding this dual nature is absolutely crucial to decoding why the market is so precariously balanced right now.
Because of that split personality, professional investors don't just walk away on a flat trading day. They know this is the calm before the storm. Right now, there are four major global factors bubbling just beneath the surface, and honestly, any single one of them could trigger a massive breakout. The smart money isn't resting, they're positioning. They're actively modeling out scenarios based on these specific catalysts, calculating exactly how the supply and demand scales are going to tip once the next wave of macroeconomic data hits the wire.
We can actually break these triggers down into what we'll call the rule of four. That's U.S. inflation data, interest rate expectations, U.S. dollar strength, and green tech demand. Let's run through exactly how each of these acts as a catalyst.
So let's move to the first driver and see how this builds, starting with U.S. inflation. Now, you already know that elevated inflation drives a massive flight to safety. When the dollar loses purchasing power, silver acts like a magnet for capital protection. The big thing right now is watching how sticky this current inflation cycle proves to be in the upcoming CPI reports, because that dictates the intensity of the buying pressure. We aren't just looking at whether inflation is up or down, we're looking at the rate of change compared to Wall Street's expectations. If an upcoming report comes in even 0.1% hotter than anticipated, man, that safe haven reflex kicks in instantly. Investors start front-running the data, rotating out of fiat and into hard assets, which can cause silver to spike violently.
Right on the heels of that, we have interest rate expectations, which of course is directly tied to the inflation data. We're talking about the forward guidance from central banks, especially the Fed. Since silver doesn't yield a dividend or pay interest, the opportunity cost of holding it heavily depends on the broader rate environment. If the Fed signals they're keeping rates higher for longer to fight off that sticky inflation, it creates real headwinds. But, and this is a big but, if the market catches even the subtlest hint in a Fed chairman's speech that rate cuts are back on the table, it completely flips the calculus. Just look back at historical pivot points. The second the market prices in a dovish pivot, capital aggressively rotates back into non-yielding assets like silver. Literally a single sentence in an FOMC minute report can inject massive volatility and evaporate our current flat trend in seconds.
Then we've got U.S. dollar strength. Since silver is globally priced in dollars, we're closely tracking that classic inverse relationship. So the crucial point is this. Any weakness in the DXY immediately discounts silver for international buyers. It boosts demand and provides a really solid floor for higher prices. We have to watch Forex trends just as closely as the commodity charts themselves, because it's a massive global tug-of-war. If the euro or the yen suddenly strengthens against the dollar, overseas manufacturing hubs can acquire silver for cheaper, accelerating their purchasing. So you can't just look at silver in a vacuum. You've got to keep one eye on the broader currency markets, because a sudden slide in the dollar index is very often the exact spark that ignites a major silver rally.
Finally, let's pivot from the financial side to the physical side with green tech demand. This is where the long-term baseline for silver is literally being rewritten. The global push toward renewable energy and EVs, it's not just some passing trend. It's a massive, structural shift in industrial consumption. Just consider the sheer scale here. Modern solar panels require a significant amount of silver paste to conduct electricity, and global gigawatt capacity is expanding exponentially every single year. At the same time, an average electric vehicle uses substantially more silver in its electrical contacts and battery systems than a traditional gas car. This isn't paper speculation, guys. This is relentless physical manufacturing demand draining global inventories. So even when the financial markets are totally obsessed with rates and inflation, this industrial appetite is providing an undeniably strong floor for the metal.
When you put all of this together, the picture actually becomes incredibly clear. You are constantly balancing short-term unpredictability against long-term structural strength. Analysts are actively predicting serious volatility if any of those upcoming economic reports surprise the market. Now, long-term investors, they're sitting confident because of that compounding green tech demand and silver's historical reputation as a hedge. But in the short term, navigating these cross-currents requires intense attention to the data. Price movements over the next few weeks could be wild, driven by CPI prints, central bank whispers, and currency fluctuations. That is exactly why it's so crucial to follow these global market developments carefully before making any strategic moves. By the way, if you're finding this deep dive helpful and want to stay ahead of the curve, make sure you like this explainer and subscribe so you never miss our breakdowns. Which actually brings us to the most important part of this explainer, your read on the market. We've looked at the stable baseline prices, explored the tension of silver's dual identity, and mapped out those 4 massive global triggers bubbling just under the surface. So, based on the macroeconomic data we've just unpacked, what's your take? Do you think silver is going to break out above its current levels this week, or is the market setting up for a correction first? I am genuinely curious to hear how you're weighing all these competing factors. Let me know your thoughts down in the comments. Thanks for learning with me today, and I'll see you in the next explainer.